Life is life. La 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 la. Like that. Oh, busted. What?
I'll have your life if you've made a mess in that kitchen.
I'll have your life. You get that cleaning on. Going on holiday soon. Hey. Hello, boys and girls. It's Coffee with Scruff. And a warm welcome to one and all. If this is your first time here, I am the overgrown child. That is the Scruffy Trader. And sitting behind me here is Wonder Wink, who is wondering whether to strangle me or love me. Which is it to be today?
Both, depending on the state the kitchen's in.
All right, okay. I won't be on screen next week. I'll be in A&E because I made the coffee. Because we all know Scruffy likes a coffee. And, well, let's just say...
It didn't go well.
You're a stupid man! A stupid, stupid man!
I'm in trouble yet again. Shocking. Where you going?
I'm going out.
You're going out?
Shopping.
Yeah. Oh, shocker. So, for those of you who've never been here before, yes, it is a trading channel. Yes, I am an overgrown child. And yes, that is my real life wife. Believe it or not. Not paid for, as somebody sort of suggested. I don't earn that much to pay an actress. I really don't. I married her because I liked her. It's a shocker, that, isn't it? This new world thing, you know, where you go on holiday because you earn some money. You drive a car because you earn some money. And you get married because you fall in love. Maybe I'm old-fashioned, because apparently the rest of YouTube is you rent your car.
You ding-dong!
You pitch up for a day on holiday just to take some nice pictures.
You ding-dong!
And you pay somebody to sit in front of a camera with you.
Matron, take them away. Oh.
I don't live in this world. It's not for me. That, to me, that's La La Land. And that's where a lot of traders live as well. And that's kind of the moral of the story. So today, I'm going to sort of touch on bringing trading back into the real world. Because Coffee with Scruff is basically my thought across the weekend on what's happened in the prior week. And that's it. And if I'm asked a question, I'll bring it up. Now, today is brought up from Yanis from the Scruffy Squad. So it's a super salute to you. And rather than do it in the live stream as requested, because the live stream's in and around fibs, I'm going to do it now because I think it's quite relevant to what's going on. And that question is netting. So let me flick this over and I'll show you, just so you can kind of see where it comes from. So there it is there. There's Yanis, our resident Olympian. We're very proud of him. And he is an Olympic trainer, by the way. So it's very great to have somebody like that here. He asks about netting and why netting. Well, as you guys know, if I say something, I try and put my money where my mouth is. Now, there's various ways of doing that. What I do for these all the time is I'll put a strength sheet in, sort of here, where I'll tell them the products I'm looking at. But I take it a step further, where not only do I tell them what I'm looking at, I'll give them a heads up as well as to the bias, the direction I'm going, and then I'll trade it for them. So it's all done prior to me trading. And not only is it prior to my trading, I'll do a full breakdown of why, how I'm going to achieve it. All right. And I think that's the fairest way. Now, I also traded prop firms for them. Now, I never wanted to trade a prop firm. And part of me still doesn't. because it takes up a lot of my time and it's better spent on my own funds. Why? Because my own funds pay me more. But at the same time, I can't really talk about it unless I've experienced it. So as you've seen, I've passed numerous prop firm challenges and they've paid me very well. This summer I'm going to calm that down because I need to concentrate on other things. But I've done it, and they're there in the wings. Some of them I'm going to let liquidate, and very reasonable. I just haven't got time to run them because I run multiple accounts for myself, and if I'm adding challenge after challenge after challenge, there's only so many hours in the days, guys. Only so many hours in the day. But there you go. There's my results. And you've seen sort of the running statements as we go through. But the 5%ers, and if you're unfamiliar who the 5%ers are, they are a prop firm.
You serious?
That can basically give you the funds to go to market at a very low barrier. And I know the first question is when you hear people, well, why would you pay to trade? Well, you're not really. What you're doing is putting up a little bit of collateral and trust and showing your skill set to these guys. And if your skill set is up to scratch, they will provide a massive fund and the pair of you will share the profits. So it's really a business partnership, but your initial stages is just shown that you have the skills and the attributes needed to do the job in the first place. Almost like your job interview, if you like.
Isn't that logical?
So who are they? Well, they'll fund you up to 4 million. Well, that's life-changing if I've ever heard of a figure that's life-changing. And you have kind of three routes. Now, the statements that I've just shown you were instant funding. The next one I'm about to show you is freestyle. I haven't done the boot camp because I didn't need to. Now, boot camp is if you have limited funds and you're almost on the cusp of profitability. It's only 85 euros to get in. You'll do 3 challenges and you've got 12 months to do it. If you pass the milestones, you'll get a 100k account. And then that 100k every 10% doubles up to a colossal sum. Now, instant funding is slightly different. With that, you will go into market straight away and earn your profit from day one. Now, I've already got the skill set, so that's the route I took. Now, depending on your bank balance is to what you want to go into. They all fund up to the same level of 2.56 million. The only difference is how many steps you have to take to get there. So if you're limited funds and you start with 235 euros, you've got a few extra steps because you've got to double up and double up to get there. Or you can put your 745 in and you've only got a few steps to move because you're already at a high level. Okay, and it's very simple. But what I'm going to draw your attention to today is the freestyle, because that is where netting is involved. And I'll touch more on that later. Now, there's 2 versions of it. There's a 25k and a 50k, either 285 or 550. There's no stop loss required. There's no drawdown limits. There is no profit targets, and there are no time limits. What you have to achieve is performance. And as you can see, it's a performance factor of 2 and a winning factor of 30. And what does that mean? It means that you have 100 trades and they'll assess your performance within that 100 trades. And your performance factor needs to be better than 2. That's like 2-to-1 ratio to your realized profits against your floating drawdown. And 30 of those trades need to be profitable. All right. So it's a very, very simple process. Where people are getting confused with it is the netting, which I'm going to try and explain a little bit on the board. Now, if you don't like prop firms and you think it's not for you, The other route to go down is kind of my preferred broker, which is BlackBull. BlackBull, I use them myself. They have Web Trader and they also have MT5 or stroke MT4, the MT platforms. As you can see there, 4 and 5 and Web Trader. Personally, I like Web Trader platforms. You see me use them all the time. And the MT5 is universal. Okay, but why these? Because at the time of the video, they have 500 to 1 leverage, small deposit to get in, and your spreads don't get much cheaper than 0. It's a no-brainer, really. It's a very cheap platform to work. If you're interested in either the prop firm or BlackBull, there are links below. With BlackBull, if you put a reasonable amount of money in, trade it, show your worth. I'll show my worth by giving you a free 1-to-1 and set you on your way. And for the 5%ers, there is a discount code that'll give you 5% off. So happy days, happy days. So where are we going with this? Well, if I could just come back to my Discord. As you can see, we're all having a big chat. There's Yanis's figures. He's doing really well, really proud of him. As I am with all of the guys, to be honest. Because if I flick this up onto here, there's Jeff, he's firing away. Mr. Anderson, EE, Mark, Carlos, they're all putting their figures in. Even Finney there, big balls. He's turning the corner, guys. He's turning the corner, his big balls. Because why do we call him big balls? Because he must have big balls for some of the trades he takes. But we calming him down and we getting him into profit. And I couldn't be more prouder, son. I really couldn't. So when I see you on the 17th, as I will the rest of the guys, we're having a bit of a scruffy get together. I'll buy you a drink, son. But you'll buy me 10 because I want to get battered.
You ding-dong!
Never mind. But yeah, very proud of all of the guys. They're coming on leaps and bounds. But let me go back to the prop. Now, you'll see these. Now, I've put mine in as well. It's early days for me into it. I've got like 1,000 quid's worth of profit. Oh, well, just shy of 1,949. 8 of the trades that I've taken are in the profit factor, so I'm quite happy with that. I've only taken nine trades, so it's all right. I'm above the level that they want. The kicker with this is you've got to maintain it, you know, and that's where netting can catch people out, because it doesn't have a drawdown limit. In other words, with some of them, they'll say, once you've hit 4% drawdown, that's game over. Here is not necessarily the case. Go down and down and down. All right. So netting can get you out of trouble, but it can get you into trouble as well. All right. So let me jump on the whiteboard and I'll kind of explain it a little bit more for you.
Well, we're waiting.
So what is netting? Well, I've netted myself a coffee, so let me have a slurp of this. And we'll crack on. Got to keep the throat lubricated, you see. I talk all day. Right, netting. What has that got to do with Forex? Believe it or not, it has quite a lot to do with Forex. There are different ways of entering a market. You either go 100% in, or you break it up into what's called pound averaging or dollar averaging, depending on where you are in the world. Now, there are 2 versions of pound averaging and dollar averaging. There is a martingale system and there is the banking system. The martingale system is incredibly dangerous, and what it means is if you enter a position at £1 and the market goes against you, you enter another position at £2, market goes against you, enter another position at £4 and £8 and so on. Basically, you're doubling up all the time in a prayer that when the market moves up, this big position doesn't have as far to go to clear these off. The downside is the markets are erratic, and they'll be more erratic than you'll be solvent, because it's just bigger. So unless you've got a massive fund and you're sort of Goldman Sachs, that will blow your account straight away. Now, pound averaging is you will start with your opening position. We'll just use a fiver to start with. Just put Stormy in the middle there. This is Stormy, the traveling stormtrooper. And what you will do is you will divide that up into separate bids. Now, personally, I like 5. So I would have 5 times £1 equaling the 5. And the way it works is I'll put £1 in, market goes against me, put another £1 in, market goes against me, another £1 in, market goes against me, till I have completed the £5, then no more. So basically what I'm doing is I'm reducing exposure, but as the market moves up, it increases profitability. Now, a lot of people don't understand this, which is why they mock me. And they say, hey, your 10 pip target's useless. It's not. It is a minimum to get in. I am expecting to go backwards, and going backwards gives me a bigger profitability. Simple stuff, you know. Now, if you have that position or understanding in your mind, you're halfway there to netting. Now, on a normal spread, put my teeth back in, spread betting platform, each position would be individual. All right, so each pound is its own trade, and I can scale out of that bit, move it around, take profit out of it, all sorts of different things, and let them all run. And you see me do that all the time. I've done it for years, and it's something I understand very well. Netting, however, combines all of the products, or all of the orders rather, into one single position. So I'll give you an example. Just draw a couple of levels on here. So you've found a trading arena, okay? And you see your price coming into it. There. So your price has come in, and you think, amazing, I'm ready to trade. For whatever reason that you want to get in, and as I say, I'll go through different things. Monday I'll do the power of 20 sort of thing. And you're going to get in on the break of this, which would be there with a view to go up to the next level. A very easy, simple process. Okay. So your next candle comes in here. Right. It's took you into the trade, and you think, fantastic, I have a position, right? And I'm ready to go. Now, if you put your whole £5 position on at this point, you have nowhere to go but ride it out. You're either going to hit your stop, which could be down here somewhere. So we'll put another level down here, there. And your kind of stop area, sort of around this area sort of thing. So that's your stop. And that's it. So you're either going to the top or you're coming down to be out. Simple. You switch your machine off, walk away, come back, it's either good or bad. But it turns against you. Here. And you think, bollocks, this ain't good. It drops down again. And you think, bollocks, this is not good. What do I do? Well, if you're pound averaging, that's a good thing. In fact, the deeper it goes against you, the better it is for you. Right? But with netting, what it does is it's going to combine the orders. So this is your entry point here, ET. You know, so you entered there. You might decide to yourself, right, if I see a green coming in, okay, and you get a bit of a sort of something like that, where it's dipped down, and you think to yourself, right, I'm going to put another order in here because I believe it's going to go to the upper side. What happens is that and trade 2 are then combined into a single position, and it works out the average or the net difference between the two. So if you could imagine that was at level 100 and that was at level 90, what it'll do is it'll put your break even point here at 95. So that'll move down and that'll move up. You with me so far? And if you put another order in down here, order 3, it again works out the average between this and works out the net, and it'll move that average down to there and that order up to there. And then what happens is the market doesn't have as far to go. So in some ways it's a good thing, other ways it's not so good. But if you've got your new average here and that starts coming in, you know, and we'll just put the figures in so that you can see it. So got a bit of a drop down here, so your chart looks a little bit like this. I am no Picasso, by the way, boys and girls. You can certainly see that looking at my face. I've only got a face a mother could love. Then again, Winky likes me with a bag over it. And then we have our little green candle. Oops, that's black. There's a green one. We'll use the green one, boys and girls. And then we have a green candle that came in here, just like so, on its journey. And then it's back into profit. All right. That's netting in a nutshell. So I'll kind of simplify it in just a second when I figure these out. Right, it's that one I want. So I'll just swipe that off because that's roughly what happens. So what netting is, it's the AV of price. Okay. So if you have an order here, which is 1 at 100, you take your second order at 90, your netting break even is the average of the two, which would be 95. Okay. And then as you go further down, sort of that trade here, then starts working it out, that average might end up here. And then again, if you put another order in down here, again, the average works out, pulls your break even point. Now the break even point is where you become profitable. Okay, so that's the next part. So once you've got the average of price, the next part of it is you must be above the break even to profit. Okay, so what it means is, even though you've entered down here and in theory this should be in profit, it's based on all of your trades and you have to hit the break even. So the part that you've got to get your head round is you're not managing 5 individual trades, you're managing one that's averaged out. Well, that kind of makes sense. I genuinely do. But the next part of it was, what are my thoughts? let me jump back down here and I'll give you a little heads up as to whether I think it's good, bad, or indifferent.
I don't know where you get your delusions, laser brain.
Okay, so the second part of the question was, what are my thoughts on the program? I kind of have a love-hate relationship with it. And it's nothing to do with the 5%ers or the program itself. It's my own inner demons. As to the 5%ers, I've got all the time in the world for them. This is not paid, endorsed, or anything like that. I do it off my own back because the guys in the Scruffy squad wanted to try it. And when I checked the 5%ers out, I agreed with their ethos and what they're trying to achieve. And because I have it in front of me, I like to speak from experience when I'm talking to the Scruffy squad. I can't say I've done this unless I can back it up. And that's why you see a lot of my in the moment trades, because I tell them what I'm doing before I take those trades. I ain't got one of these. So it's the fairest way it can be. And I mean, I'm contacted regular asking me to endorse various prop firms, and they'll pay me to do it. And I say no. You know, I see plenty of YouTubers out there that have got massive channels and they're saying, oh yes, this is amazing and one thing and another. They're paid to do it. And I think that's a little bit unfair. Whereas here, I'm just doing it to help the guys. It's that simple. Because I like to speak from experience. And unlike some of the people who have a pop at me, I mean, recently I had a pop at my wage. I'm quite transparent about what I do, how I get. You've just seen some of my statements. They think 30,000 is a waste of time, but that's my basic. And I work an hour and a half a day, 3 days a week. I think that's a pretty darn good wage, you know, and I get little bits over and above that because some days I do better than others and it averages out across the year. And that's why I say trading in the real world, because I've done this a long time. I've got a good size account. And it doesn't pull in the millions they talk about. And why? Because they live in la la land. And let's be honest, I'll still be at the screen next week, clicking the mouse, trading the DAX, banking my couple £100, and they're probably still sweeping the floor. So there we go. If you want to pay a rise, son, get yourself down to McDonald's. They've upped the wages. You'll do quite well there.
I have recently been placed in charge of garbage.
Anyway, so what is my love-hate relationship with this? Well, I love the fact that you get 100% of your winnings. Now, as you've seen, I've got a shade under £1,000 in a few days. So I like that. That is superb. And the next question, inevitably, is, well, how can they do 100%? What's in it for them? Well, it's very, very simple answer to the question. There's two accounts. You have your account, which you keep everything within it, and everything that you do is cloned over into another account, and they keep what's in that account. Simple stuff, you know. It's not rocket science how that's done. Now, with some of the other programs where you see a 50-50 split or an 80-20 split, it is a singular account and the profit is divided. So that's kind of how those systems work. So I like that. I like the fact I can trade how I choose without any limitations, or sort of limitations, shall we say. In other words, there's no time limit, there's no drawdown limit, there's no profit target. I just have to do my thing and just get on with it. Well, if you're a position trader, it could take you 2 or 3 years to do 100 trades. If you're a swing trader, it could take you months to a year. If you're a scalper, you might do it in a few days. If you're a day trader like me, it might take you 60, 70 days. It's all there for you. So it's kind of a one-fits-all program. And it's not like you're losing any money. Your profits are racking up. The only limitation to it is when you can take it out. And that's when you've completed your 100 trades. So if you are a position trader, you're going to wait a long time. If you're a sort of scalper sort of thing, you'll get it relatively quickly. So they are good things. And the fact that they have the metrics in them is also a good thing, because it will weed out the wannabes and the chances, you know, and there's so many wannabe and chances out there. These are the ones that have the wonder schemes that they're going to 10x this account and then fund it with this account and then put it into this account.
They've done studies, you know. 60% of the time, it works every time.
That doesn't make sense.
They'll never make it. Never in a million years. Because when you're trying to fund multiple accounts off a slave account, you screw one, you screw them all. So that system never works. I trade multiple accounts, but I don't trade the same asset in each account. Why? Spread the risk. And that's what trading is. It's not about sort of looking for the millions. It's just about managing your time and managing your trades correctly. Now, if you have a portfolio of stocks and shares in a ISA, for argument's sake, and for those overseas, I'm not sure if you have ISAs, but ISAs is a tax-free savings program that the banks offer in the UK, and you can pick and choose your stocks and shares if you wish, or you can have it pre-managed by the bank. They don't put everything into one asset. It will be spread across several different asset classes. Some are high volatility, some are low, and it balances out in the middle. Do your trading the same. Have high risk, low risk, medium risk, and it'll balance out. So, sorry, getting off on where. Get back to this. So these are some of the little things that I do love about it. And like I say, the metrics involved, i.e. keep it above 2. 30 of your 100 must be in profit. So again, it goes back to whatever style you are. Now, personally, I think if you're under 50, you're a gambler. I don't like that metric at all. It's kind of telling you that you can be terrible at something and still be okay. No, that's the wrong message to give out. And the only analogy I can give, I mean, I recently just had my car serviced. That thing costs a fortune to run. If you don't know what my car is, it's this. So it's not a cheap car. Parts are very expensive and servicing's very expensive on it. But if I take it to a Muppet and they can only fix it 3 to 4 times out of 10, they will do more damage in them 6 than they will repair in the 4. And trading is exactly the same. You can do a colossal amount of damage in your losses before you hit your winners. And the other side to that, without going off on a tangent, is when you have 3 out of 10 winners, for argument's sake, and they say, oh, well, it's 3 to 1 and everything. And I've seen them saying, every one of them has to be 1 in 4 and 1 in 5. La la land, absolute la la land. Because those trades don't come along very often. And the other side of it is they have to be identical. So how many times in a market are you going to see a 1 in 4 trade on an hourly chart? It doesn't happen that often, because the chances of hitting the bottom and hitting the top is borderline impossible. You can't. It's the bit in the middle. Rule of 3. Very, very simple. So what I'm driving at with that is not all trades are equal, because a stop has to be where a stop has to be. Now with the freestyle program, because you haven't got any drawdown limits, if you like, you can trade it your way. So if you are aggressive with your stops, you know, and you have quite a wide stop and you're staging into it, it's ideal, as long as you can understand that you're not going to be in profit till you hit the break-even point. And then from the break-even point, it has to run a certain level before it hits the metric. That's what you've got to get your head around. Okay, so why do I hate it? Well, I hate it because I've got to actually change my mindset. And I'm quite, I wouldn't say I'm not sort of open to new things. Because I'm always open to new things, especially when Winky comes booling into the bedroom.
Oh, that's disgusting.
Hey, that's your dirty joke for today. Well, she normally comes booling in to pick up my dirty washing. That's about as good as it gets. What, you thought it was something else? Did you? Graceful. How dare you think about my wife that way?
You're sitting there imagining that with a big smile on your face. You dirty fecker.
My job. Right. I'll get back onto track. I do get wrong sometimes for my sense of humour and the fact that I don't sit here with a dicky bow on and say, okay, boys and girls, today we are going to be discussing trading and we are going to show you how the moving average works in relation to a supply and demand zone. Bollocks to that. I'm not here to be a teacher. I'm here because I enjoy it. And I'm also here because I am a trader, professional trader, that's done it for a long time and knows what they're doing. Unlike...
You ding-dong!
I think I can smell shite.
It was a complete fuckwit. So, what was I saying? Hatred. Yeah. The part that I'm sort of having the love-hate relationship with it is I like to do things my way. And when it comes to the charts, I don't chop and change. I have one system that I use for day trading. I have one system that I use for swing trading. And I don't really mix them up. There are certain elements within each because you've got to have little broad strokes that help you. But the core value is the same on each. And for me, it is using 5 positions. Now with the freestyle, I'm down to 1. So I've got to get my head round that. And it may bite me in the backside. It may bite me quite hard, actually. So what I'm going to do is I'm going to do this in kind of 2 ways. The first stage, I am just going to mess around with it. I'm going to play with it. If it passes, fantastic. If it doesn't pass, I am not worried. In fact, I am expecting it to fail. And I know you're going to go, oh, hold on a second here, big boy. You don't fail that much. I've seen your stats. You're on sort of 88, 90%. You're right, I am. But that's because I know how to average out of a trade and how to get in and out of a trade. With this one, it's slightly different. So what I'm going to do is I'm going to use the first one as a practice run. And if I can nail it down within the 100 trades, fantastic. Should be able to, because it's not overly difficult to adjust. But I'll be able to see where the error of my ways are. And then once I've ironed them out, the second phase will be the one that pays me. That's the plan. So again, it comes down to thinking out what you're doing and making certain that you are mindset and focused on the job in task. Simple, you know, almost like my apprenticeship, if you like, because if you're learning a new skill, you don't get it right straight away, do you? You've got to sort of have a little bit of a dry run, a bit of a practice, and then off you go. Just my thoughts. Just my thoughts.
Okay. Well, the mind's an amazing organ.
I've got an amazing organ.
It's capable of far more than you'd imagine.
Right again.
So there you go. Just a few of my thoughts on sort of netting and how an old dinosaur has to change its ways every once in a while. And hopefully it inspires you with your own ways. And if it does, drop down the description. Like I say, there's a 5% discount if you want to try it. There's also links to Winky's little shop, because that's how she earns her living, selling the odd t-shirt. And also details of the Scruffy Squad and BlackBull. So as always, guys, trade well, keep your risk managed, always keep learning, but above all, do what you love. and the money will follow. See you all in the next one.